As Capricorn trader, you should always test different ways of trading to try and find something that will give you a better edge in your trades. You shouldn't be afraid of the explore the new approaches that aren't popular in the trading game. And trading with the range bars is the approaching that is often neglected or ignored completely. By most traders, ranged bars below two type of the chart that is implemented of time. Unlike the more conventional chart types such as the candlesticks, the bar charts will range bars only. The horizontal price level is plotted. Time is redundant. Range bars were designed by the Brazil traders Vecino Nicolasic Black in 90s. Due to the volatility of the markets at the time, he believed that the price was the most important aspect when analyzing the aspects as the local markets at the time were very volatile. Nicholas became interested in developing a way to use the volatility to his advantage. He believed price movement was the paramount of the understanding and using volatility. He developed range bars to take only price into considerations, thereby eliminating time from the questions. As the name suggests, range bars are specifically used to identify ranging price actions and trending price actions. Now, most of the existing trading platforms have not yet incorporated the range bars as one dreadful chart types, but there are a lot of the workarounds, including the MPNT4 trading platform. You can find this type of the chart on the trading platform. So, how to range bars calculate price. Range bars take only price into consideration, therefore each bar represents the specific movement of the price. You are more likely familiar with the viewing charts based on time. For the instance, a 30-minute chart where one bar shows the price activity for each 30 time period. Time-based charts such as 30 minutes charts in this example will always print the same number of the bars during each trading sessions, regardless of the volatility, volume, or any other factor. Range bars, on the other hand, can have only number of the bars printing during the trading sessions. During time of higher volatility, more bars will print. Conversely, during period of the lower volatility, fewer bars will print. The number of the range bars created during the trading sessions will also depend on the instrument being analyzed on the specified price movements of the range bar. Range bars follows three simple rules. Each range bars must have the right low range that equals the specific range. Each range bars must open outside the high-low range of the previous bar. Each range bars must close the easier and the high or its low. In this example, we have 10 pip Euro USD range bar. The high and the low of each bars is the chart in the 10 pips. And new range bars opens only when the price closes above or below the previous range bars, higher or low. Basically, a range bar is the bar that has the same price implement that each bar closes easier at the high or the low, regardless of the where it's opened. So if you want to range 10 cents for the stocks, set your range to the 10. Every time the stocks move 10 cents up or down on the total of the bar, it will complete the current bar and start a new one. Time has no effect. This can give you an edge in markets that are more sideways or very flat. How to set the range bar of the size specifically when the degree of the price movement for creating the range bar is not one size First of all, process. Different trading instruments move in a variety of ways. For example, a higher price stocks such as Tesla might have the daily range of the $20 to $30, or even more. Or a lower price stocks such as the General Electric might move only the percentage of in a typical day, maybe 30 or 40 cents. It is common for higher price trading instruments to experience greater average daily price range. Let's compare both Tesla and the General Electric with 10 cents range bar. One half of the trading sessions of the Tesla can barely be a comparison to the feed on the screen, since it has much greater daily range than General Electric's, and therefore many more 10 cents range bars are created. Tesla and General Electric provide an example of the two stocks that trade a very different price, resulting in the distinct average daily price range. It should be noted that while it is generally true that high price trading instruments can have the greater average daily price range that those that are lower price instrument that trade at roughly the same price can have the very different levels of the volatility as well. While we could apply the same range bar settings across the board, it is more helpful to determine and improving range settings for each trading instrument. One method of the establishing suitable settings to consider the trading instrument's average daily range. This can be accomplished through observation or by utilize indicators such as average true range (ADR) or the daily chart interval. Once the average daily range has been determined, a percentage of the range could be used to establish or desired price range for the range bar chart. Another consideration is the trader styles. Short-term traders or the scalpers may be more interested in looking at the smaller price movements, and therefore may be inclined to have the smaller range bar settings. Longer term trade and investors may require range bar settings that are based on the larger price movements. For example, a scalper trade may watch a 10-cent range bar. This would allow the traders to watch for the significant price movements that occur during the trading sessions. Conversely, an investor might want to $1 range bar for the same assets. This would help reliable price movements that would significant to the longer-term styles of trading and investing. Now, do not confuse the range bar that Renko charts. At the first place, it is easy to find more similar between the Renko bar and the range bar. In fact, there is something common between these two charts type. They are both independent of the time, focus on the price alone. However, that's where the difference ends. In the range bars, every bar is same length, including reversals. In the record bars, every bar is often the same length, including reversals, but price must trade 2 times to the record bars to the opposite directions. Trading with the range bars can help traders with the price in the consolidation, consult from the much of the noise that occurs when the price bounce backs and force between a narrow range can be reduced in the single bar or two. This is because the new bar will not print until the specific price range has been fulfilled. This helps traders distinguish what is actually happening to the price, because range bar charts eliminates much of the noise. They are very useful charts on which to draw trends line. Areas of support and resistance can be emphasized through the application of the horizontal trend lines. Trending period can be highlighted through the use of the uptrend lines and downtrend lines. Range bar chart Range bar charts are perfect for the scalping strategies, and that is because you can read the volatility better. Volatility refers to the degree of the price movements in a trading instrument. As the market trades in the narrow range fever, range bars print reflecting decreased volatility. As the price being to the breakout of the trading range with the increase of the volatility, you must speed time observing the particular trading instrument with the specific range bar settings applied. Throughout this careful watching, you can notice that the suitable changes in the timeline of the bars and the frequency in which they print. The fast the bars print, the target the price volatility, the slower the bars print. The lower the bars volatility, periods of increasing volatility often slightly trading opportunities as the new short trend may be trading. If you scalp for the Forex market, for the example, and you will seek to make the 10 tips on the trade, wouldn't it be more useful to the pull up in 10 pip range chart? Yes, it would be. Sounds logical. 10 tips range bar would not take the time factor into the account. Instead of it, it would affect the price movements completely, which is exactly what we need. Once the currency trade moves outside the 10 tips range, another candlesticks will form, no matter how many minutes or the seconds this may take. The ability of the exclude the market noise is the cornerstone of the success. Is the trading is the financial market. Range bars will help you to see the true picture of what really happens with the price of the trader's financial instruments. Independent of the what indicators you use, range bars will become the perfect supplements to the trading methods you use. Since they react to the market change much faster, this video was basically introducing the range bars. But in the future, we will go deeper and build some trading strategies based on the range bars. As always, if you learned something new and found value, always like to show your support, subscribe to our channel and hit the bell icon to stay notified when we upload next video. Until next time.